Today, BlockFi files for bankruptcy as the fallout from FTX grows. Crypto firms are lining up bids for bankrupt crypto lender Voyager Digital. And Colin Fitzpatrick of Animal Concerts discusses the outlook for Web3 in 2023. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto prices falling to start the week after distressed crypto firm BlockFi filed for bankruptcy. It's the latest fallout from FTX's collapse. Bitcoin dropped 1.5%, but did stay above that $16,000 mark. Ether plummeted 3%, trading around $1,100, and Solana tanked by more than 5%, all as of noon Eastern. Okay, let's talk about some of the top stories, and we begin with some breaking news. BlockFi filing for Chapter 11 bankruptcy protection in the U.S. today. This comes after the fall of the firm's presumed acquirer, FTX. Over the summer, FTX had swooped in to help BlockFi to prevent bankruptcy by extending a $400 million revolving credit facility. It also offered to potentially buy the troubled lender after the implosion of the crypto hedge fund Three Arrows Capital. In the filing, BlockFi indicated that it had more than 100,000 creditors with liabilities and assets ranging from $1 billion to $10 billion. The company, which according to PitchBook was last valued at $4.8 billion earlier this year, is among many crypto firms now feeling the pressure of FTX's collapse. And BlockFi had already halted withdrawals of customers' deposits after FTX unraveled, and the company previously admitted that it had, quote, significant exposure to the now bankrupt exchange and its sister trading house, Alameda Research. In a statement, Mark Renzi with Berkeley Research Group, which serves as BlockFi's financial advisor, said that the company, quote, looks forward to a transparent process that achieves the best outcome for all clients and other stakeholders. A BlockFi representative did not immediately respond to CNBC's request for comment. Next, Binance and other crypto firms are preparing takeover bids for Voyager Digital, another company that FTX was going to acquire. Binance confirmed reports last week that its U.S. subsidiary plans to make an offer to rescue the troubled digital currency lender from collapse. That's following Voyager's bankruptcy filing back in July. It previously offered to buy the firm after Three Arrows Capital defaulted on a loan from the company that was worth $670 million. Voyager was set to be acquired by FTX's American unit for $1.4 billion after Sam Bankman-Fried's firm won a U.S. bankruptcy auction. Voyager customers have not been able to get their money out since it paused withdrawals amid an industry-wide liquidity crisis. A spokesperson for crypto and NFT trading platform Crosstower told CNBC that it is also planning to make a renewed bid for Voyager. Last up, BitGo said it recovered $740 million in FTX assets so far, just a fraction of the billions that are likely missing. BitGo, the crypto custodial company hired by FTX after it filed for bankruptcy, disclosed the figure on Wednesday in court filings. The biggest worry for many FTX customers is whether they'll ever see their money again that they had invested on that platform. In an email sent to us, BitGo CEO Mike Belshi said FTX's former CEO, Sam Bankman-Fried, proved that there is no such thing as a safe conflict of interest. Trading, financing, and custody need to be different, as he put it. BitGo has been advocating that for years and says it's time to start making it a reality for the good of crypto. He went on to say that SBF committed financial fraud and that this is not a crypto issue, but a market structure issue. BitGo also estimates that the amount of recovered and secured assets has likely increased above $1 billion since November 16th, when that number was $740 million. The assets recovered by BitGo are now locked in what they call cold storage. It's stored on hard drives in South Dakota. It's not connected to the web. All right, on to our main story. Crypto World's Jordan Smith spoke with Colin Fitzpatrick, the founder and CEO of Animal Concerts, about next year's outlook for Web3 and the timeline for mass adoption.
All right, so let's start with where we are now in the Web3 space. I mean, walk us through what adoption or development has looked like this year, especially given the uncertainty in the digital asset space right now.
So obviously we've had a very, very difficult year in crypto. It started off with Terra Luna, then Three Arrows Capital, Celsius, Voyager, FTX, and you may have just seen BlockFi have now just filed for bankruptcy. So it's been a pretty difficult year. However, I still do think that Bitcoin and a lot of the cryptocurrencies out there have weathered the storm pretty well, and it just shows. I mean, if you look into the history of it, Bitcoin has had five, six, or more massive 50% or more drops in the history. And, if you've been paying attention to it, you will realize that this is what it's built for. It will recover. It always does. So, people always seem to pile in when Bitcoin is going up from 20, 30, 40, 50, 60K, and very, very scared to get in right now when it's at the lowest it's been in 2 years. But, maybe this is the opportunity of a generation right now. I think if when people do take the time to truly understand Bitcoin, but also before that to understand money, and understand why Bitcoin is what it is, then you'll kind of have a better understanding of why we're still very confident in its future. At the end of the day, the Fed has printed 40% of all dollars in the last 2 years, and that is causing the massive inflation that we're showing, diminishing everyone's savings, and Bitcoin is the solution to that.
So you mentioned there that people have to take the time to learn. I mean, what does the education gap or the adoption gap look like right now in the digital asset space, whether it's crypto or whether it's some of the Web3 technologies that your company also helps with? I mean, in 2021, it seemed like everybody was ready to get on board. It seemed that everybody was
Yeah.
willing to buy some sort of cryptocurrency or NFT or digital asset. Things have changed this year. Where are we now?
Well, at the end of the day, like any solid investment advice, you've got to pick something that you believe in and that you see a future in, and you're not in it to make a quick buck, but you're betting on the long term. So ultimately, we had a lot of people jumping on in the last while who maybe lost a lot of money, and I think at the end of the day, right now is a time that the market has learned a lot. Regulation is coming. Let's all be really, really clear on that. And I think we've seen it because we don't want these failures of the system again. And let me be very clear on this. The FTX saga and BlockFi, this is not a failure of crypto. This is a failure of a traditional business operating in the crypto sphere, but playing with your money the way the banks did back in 2008. And that has to stop.
Yeah, there's a lot to talk about there in 2023, especially around expectations around regulation. But I do want to also ask you, if we're looking ahead to next year, is there the case that DeFi has the potential to really run away with it in terms of adoption or popularity, given what we've seen from some of the scandals in centralized crypto finance exchanges or businesses?
Yeah, there's look, DeFi had its DeFi summer last year and it all went crazy. But this is still reasonably new technology, and it's going to take some time to bring full adoption. I mean, at the end of the day, anyone like me who's buying and selling and then sending and receiving cryptocurrency consistently, you're still sweating, wondering if it's going to get there. And, we've got some miles to go to make it so easy that anyone can really do it. And there's awful lot of people working on that problem. Okay. But the technologies around the blockchain will flourish. So, you've got DeFi, which will take all of the responsibility to you, but it'll take all of the risk away because of the fact that, not your keys, not your crypto. If you have your crypto on an exchange, you risk another FTX happening. And that's why I would advise everyone takes it into their own wallet and have the precautions that they should to keep that wallet safe. But you've also got NFTs, and this is one of the most misunderstood areas because we see these extremely expensive pictures of, apes and monkeys selling for millions of dollars. And sure, there's some cool stuff behind it, but the technology behind NFTs is phenomenal. And trust me when I say that in the next couple of years, it's going to be completely revolutionary. What we're doing is we're using NFTs to create communities, to create access, and really have true ownership over an asset that is digital, because people don't really fully realize yet that digital assets have just as much value as physical assets, and especially the youth of today are realizing that. So here at Animal Concerts, we are bringing concerts online and into the metaverse, and we're helping these A-list artists and celebrities expose themselves to new people in new areas, but also giving people ownership and a part of the actual action with NFTs. And I think that's really exciting. And you've even seen Snoop Dogg, who we are working with. He has taken some of his music from Death Row Records, who he's the president of, off Spotify, off Apple Music. And he said, if you really want to own my music, you will buy the NFT and then you'll have true ownership and you'll be able to trade it, you'll be able to exchange it, make money on it. And that is coming. Music is one of the best industries where NFTs will be able to revolutionize things, but it's coming to an awful lot more industries as well.
Yeah, I mean, you mentioned there are so many use cases that you expect for not just crypto, but for Web3 technologies, NFTs in the future. But in that same breath, you also mentioned there's an education gap there. There's a lot of work that has to be done to get people to understand how to use this technology. So being so involved in the industry, what do you see as most important to work on in the next year to get people through that education gap or get them closer to understanding some of the use cases that you're talking about there?
I think it comes to a couple of different avenues. I mean, when people come up to me and go, what's this crypto thing? I want to learn about it. I've stopped really trying to persuade anyone because you can't do it in one conversation. It's like asking someone to change their religion, in 5 minutes. It's not going to happen. People have to go on their own journey of learning and education. But to be honest, I think a lot of it is really down to the technology itself. Once the technology actually advances to a degree where it is very, very simple to use, that is where it's going to become ubiquitous. And one of the things I find very interesting, if you look at what's happening right now with Twitter, people are predicting the collapse and the demise of Twitter, but never underestimate Elon Musk. He sees Twitter as the best platform for what can be the world's global, just stage and like a town hall. He's going to bring payments to crypto, to Twitter. It'll probably be based on cryptocurrency, and it'll be something that is so easy to use. It'll be like sending a text or a WhatsApp or something like that. When that comes, that is when it's really going to flourish and become completely ubiquitous. And then, the journey will come by people experimenting and understanding it a little bit more. But also, bringing it back to what we do, we have the ability to bring millions of people into the metaverse for the first time. And that's something that everyone is thinking about and really wanting to know more about. But, right now it's a few games and it's a few worlds, but having an event and having an activity that you can really explore in a 3D world, the more of these, the better. And there's an awful lot of very smart people working on these problems to really accelerate this transformation into this new digital world.
Before we go, here's one last thing. We recently spoke to Asaf Meir, the CEO of digital asset risk monitoring startup Solidus Labs, who weighed in on the collapse of FTX. He says the fall of the once major crypto exchange will set the industry back by at least 2 years. Take a listen.
I would be naive to say that no, the industry is going to move forward normal in the same pace it did before. It's not going to. This is going to cause, as I mentioned, a trust issue that we're going to have to solve, which will likely hinder the progression and the growth we've seen thus far. We're entering a short-term period, yes, where unfortunately the growth isn't going to be what it was. But in the long run, it's actually given a lot of companies the ability to say, okay, let's focus on what the most critical components are to build that trust.
You can catch some more of Meir's interview and find out what prompted him to leave Wall Street to start a company focused on digital assets. Head over to cnbc.com/cryptoworld. That's all for today. We'll be back again with a lot more tomorrow. We'll see you then.